Well, we've been together for a while. We're in 40-some episodes now, and you're kind of getting good at trading, right? You're taking trades, whether on paper or for real money, and you're winning a lot. And yes, you're losing some. Hopefully by now you're winning more than you're losing, and hopefully by now you're controlling your losses so that you lose less than the average win when you win. Hopefully you're doing all of those things, but if you're not, and even if you are, here's my advice to you. Make sure you track every trade you take. The worst thing you could do is bury the losers and forget about them. You should have a spreadsheet. You should keep track of every trade so that you can go back and review daily, weekly, monthly at the end of the year, and you can go back and see all of the trades you took in the past, what worked, what didn't, your average profit, your largest profit, your average loss, your biggest loss. We do all of that at copyandwin.com, where I call out winning trades every day to our thousands of members, and that's what you need to do as you continue on your trading journey. Because here's the thing I didn't realize at first when I started trading. You get used to trading the same things. Whether you trade the SPY or Microsoft or Apple, whatever, Nike, you'll find after a while that it feels familiar, that the same trades and the same setups seem to happen a lot. And I'm telling you now from experience, if you have a spreadsheet where you can go back and you can look at all your past trades, that will inform your current trading decision and help you realize whether that last trade worked out the way you wanted to. So when you build a trading spreadsheet, track the following things, okay? Track the date you entered and the time you entered. Track the price you entered at. Track the highest that trade went. Track the price when you got out. And track how low it went. Sometimes it might have been a red trade. You might have actually been down money, but within your stop loss, and then it came back up and won. So track your drawdown on every trade, maximum drawdown, even if you ended up winning. Figure out how low it went, because that'll inform your stop losses later on. Track how high it went, and then track where you got out, because we never get out at the highest point, right? So if you start tracking all of that, and if you're trading a few times a day, after a year, you're going to have hundreds of trades to go back and look at, and you can start creating formulas that'll give you your personal trading averages. And once you start keeping track of your performance, you'll be able to improve your performance, because you'll be able to adjust your stop losses, figure out that you're leaving too much money on the table, and figure out, well, maybe I have to adjust my profit targets. Or you might also figure out that you're getting out too soon, taking profit, wonderful, but maybe you're not letting the trade develop enough and you're leaving too much money on the table. Also, when you keep it in a spreadsheet, I know we want to bury the losses and never remember, but if you keep your losses in your same spreadsheet, you start to be able to track your loss and win ratio, and that's important because you can feel like you're winning or you can feel like you're losing, but if you track everything, then you know for sure. And last tip, and I keep trying to drive this home to everybody, always, always, always trade the same size, because all of that data, all of those win losses and percentages, all of that means nothing if you had 10 wins and you won $10 10 times, you made $100, but you risked way too much, and on your very next trade you lost $200. You may have won 10 out of 11 trades and yet still lost money. So keep track of your performance and be honest with yourself. If you look at your statistics, math doesn't lie. Have a talk with yourself about how you can improve your performance by looking at how you're doing. That's the way you become a winning trader. After all, don't athletes measure themselves? They do the 50-yard dash. They keep track of how much weight they can lift. If you're a high jumper, you keep track of your best jump. Why wouldn't you do that becoming a professional stock market trader? And after all, if you do it right, you can change your life. And you'll never work a 9 to 5 ever again. Love you.